A man who moves a mountain begins by carrying away small stones. Confucius. And my friends, I have more to say on this at the end of today's program. We'll get into some of the philosophy around that and how you can use that teaching to vastly improve your ability to chart the markets. And again, what's more important than knowing the points to buy and sell every day? 10 to 15 minutes, that's all we ask to practice trade. Now, let's jump into these charts. S&P 500, NASDAQ 100, 20-year bonds, and gold all up today. Let's first look at what's going on with our weekly vertical crossover. The latest one we had was on the S&P 500 this last week. What has happened this week, similar to what we saw in gold after the weekly vertical crossover back on the 11th of September. We had an up week after that. Same thing that we are seeing with the S&P. Now, it could continue to go up. Again, as we have said from the beginning, when things were hammering down right after the weekly vertical crossover, what did we talk about when it was with the Qs? We talked about warning. You do not ever enter into a trade without knowing what your getting out point is, as well as what your, well, either way, whether good or bad, whether your profit bands or your loss bands. And I'm going to put out again at the end of today's video, profit and loss bands, understanding those things. That will be in the training at the end of the video. We have a special training for all of our subscribers today. It is a really good one. It is backtracking, using stock charts to find trading patterns. It's one of the best I think we've put out, and it's available for people who subscribe. How do you subscribe? It doesn't cost a thing. Go to chartingwealth.com, sign up. Let's jump into these charts. So what do we see this week? We have a green up candle. I'm trying to see, no wick on the bottom. A green, small green up candle. Hasn't hit as high as we saw on the prior candle. But what we see happening is it's sitting again right there, just pushing through the weekly trend line. Of course, busted through, never touched the 2-day trend line. Price percent oscillator continues to flatten out. That's not a good sign. Derivative oscillator still gaining downward momentum. We look at the 2-day chart. What do we see there? Now remember, the prior 2-day candle finished forming Wednesday. This is the first day of the latest one, hitting about where it hit previously as far as the high goes. Price percent oscillator is flat on the 2-day chart. Derivative oscillator losing downward momentum. 2-day chart is pushed through. First day of this latest 2-day candle has pushed through the weekly trend line. Half-day chart, it has soared through it in the morning. Actually, in the afternoon on Wednesday, it pushed through it. Further up in the morning, a little bit of a pullback there in the afternoon. So we see that the price percent oscillator still heading up. Derivative oscillator topped back on Wednesday morning. So again, things are not looking good at this point. We see weakness in the weekly. We see lots of weakness in the 2-day. Both are still confirmed down, but quite weak. Now you might say, what do I do at this point? I jumped in, I hit my loss band, I pulled out. What am I waiting for now? Well, the weekly and the 2-day are still primed. You can sure keep your eye on the half day just to see what happens with it. If things start rocketing down on Friday, all well and good. But again, friends, what happens when things start to go up? Hey, if they cross back over on the weekly going back up, that would be wonderful. If the 2-day crosses over going up and then recrosses, that can give us a jumping in point. Might even be safer than, again, trying to follow that half day. But again, this is why you fill out your trade worksheets every day that you are in a trade, why you fill out your daily market worksheet, your weekly market worksheet. You fill that out on Friday after the close of the market or over the weekend before Monday. How do you get those worksheets? They're in your show notes every single day for free. PDFs, print them out. Subscribe at chartingwealth.com for free. All that stuff and the trainings are given to you each and every day. Okay. Now, let's move from the weekly on the S&P 500 to the weekly on the Qs. up even more, up 1.59%. Now, we had that 2-day crossover. I know some of you jumped in, got your profit limits hit. You pulled out last week. That is fine. Again, if you did not hit what you were going to hit as far as your profit bands went in that down trade, and again, remember, it was either puts or PSQ, which is the inverse fund for the Qs. Single inverse, again, there are other options and all, but that offered you some possibilities. And again, you want to know what things are about when it comes to inverse funds. We have a great training on that. I'll also put that at the end of today's video. I'll make sure that you have that too. Profit and loss bands and inverse funds. How to make money when markets crash in your practice trade. So what do we see going on? We see that the price percent oscillator is still heading down a little bit, flattening on the Qs, derivative oscillator heading down. We go to the 2-day chart. What do we see there? It's heading up, still negative, but heading up. Derivative oscillator losing downward momentum. That's the price percent oscillator that's heading up. And look, pushed through actually back on Wednesday. So again, alarm bells start sounding when you start violating trend lines. The big alarm bells go off when you have crossovers. What do we see on the half-day chart? We can see where it has continued to move up in the morning, further up in the afternoon. So we'll continue to watch, see how things develop on Friday, and let these charts lead us. You learn more when things are tough than you do when everything is great. Okay, let's keep moving through the charts. We go to 20-year bonds. What are they doing? It looks like just a continual sideways slide after we had that 4 weeks of drop-off, really 3 strong weeks down. Then the sideways slide started back on the week ending the 4th of September. What do we see happening now? Derivative oscillator losing downward momentum, but that price percent oscillator heading down. We have a red spinning top forming. Indecision tending down. We go from the weekly to the 2-day. It's trying to cross over, going down, so pay attention to that. What could that be for you? It could be a 2-day recross at the close of the candle on Friday. So again, pay attention, see how things work. You might have the opportunity for an inverse trade or a put on 20-year bonds to practice that. What does it hurt to practice? Nothing. It makes you pay close attention to what is going on and to learn the individual personalities of the ETFs and how they change over time. I say they're like children. Children grow and change, sometimes for the better, sometimes for the worse. They mature, they become different people. Same with ETFs and stocks. That's why you have to track them over time. If you pay attention to them, you can see the character traits developing. If you don't, if you just see them on Christmas or on their birthdays or on the days they declare dividends, you're not going to know a lot about them. But if you follow them day by day, it's like keeping up with your children. Again, these need to be your children when it comes to finances and following these things. Very, very important. You practice trade them, you get to know them, you become intimate with them. Extremely important. So that's where we are on the 2-day. Pay close attention. Put in your notes. You may have the opportunity for a 2-day recross going down on Friday. Now, what do we see on the half-day chart? Down in the morning strong and then a pullback in the afternoon. Again, up 0.06%, so just barely for the day. Price percent oscillator still plumbing down. Derivative oscillator heading down. Lastly, we go to the weekly chart on gold. What do we see there? We see the price percent oscillator heading down. Derivative oscillator gaining downward momentum. What do we see on the candlestick? We see a green, solid green candle, which means a slowdown in the down movement. Again, up 0.89% for the day. We go from the weekly to the 2-day. And again, we see what's drawing is an open box green candle with a little wick on top. As far as the downward movement going, we see that slowing on the 2-day chart, still heading down, but slowing. Derivative oscillator has also lost momentum at first day of this latest 2-day candle. Again, that's the first time in a while. We'll see how that candle finishes up. And of course, what's up on the half-day chart? Still heading up, crossed over, going up back in the morning on Tuesday the 29th, leveled off on Wednesday, and then of course up on Thursday. So we'll continue to watch, see what gold does. Again, with any of our trades, always your profit and loss bands are always in effect. Pay attention to the price and learn from these things. Now, what I wanted to talk about, that's it as far as our charts go, but as far as, and I've been thinking about this a lot lately, I just finished teaching about a week and a half ago the Accelerated Market Mastery course. A great set of students, had a really good time over 3 months. Now we have our 3 months of follow-up. And I thought a lot about the things that we talk about here lately, but got to delve in them. And the quote we have today, "The man who moves a mountain begins by carrying away small stones." And what I think Confucius was trying to teach us about that, and what I see having taught this at this channel for many years now, is the importance, and I say this over and over, and I don't say it without cause, the importance of those small stones. If you carry enough small stones for enough of an amount of time, guess what you do? You move a mountain. Now, what that means for us is spending the 10 to 15 minutes a day. You can't move some small stones every 3 or 4 days, every 2 weeks, every month, and expect to move a mountain. You've got to do it constantly if you want to see results. It's just like physical training. It's just like losing weight. It's just like learning a skill. I was originally trained as an attorney, and I remember how terrifying it was to know I had a trial coming up, to get prepared for it, the crazy amount of time that I would spend and the amount of stress and all. And then as I learned, as I did trials over years, over decades, the skill set that I gained over time was phenomenal, but it was gained slowly but surely. Just like carrying those stones away each and every day, and eventually you move a mountain. That, my friends, is what you have to understand about what we do here. I know there's so many channels out there, and they've got these secrets, and you're going to learn this, and you're going to learn that, and then things are going to work for you. You know, again, P.T. Barnum said a sucker was born every minute. People who offer you something for nothing are offering you nothing. So please, 10 to 15 minutes a day, stick with it. You can do this, but you've got to have the dedication. We're not talking about a lot. And again, for those of you who are into fitness, you look at your friends who are not fit and you realize they can't get fit overnight. And the 30 minutes you spend a day, 3, 4, 5 days a week, they are what makes all the difference in your physical health and your strength. The same here with your trading acumen, your ability to invest in the future. All these things, they take a few minutes a day. And if you will add to that, while you're listening, filling out your trade worksheets when you're doing practice trades, your daily market worksheet, and your weekly market. Just start with the weekly market worksheet. See what you learn from that. Every time you do a practice trade, try the trade worksheet. See what you learn from that. They are worth their weight in gold. I don't tell you this stuff for free every day because it's worthless. I'm telling you these things every single day because they matter. They matter, and you're not going to get something for nothing. You have to put the effort in. And if you do, I just know you're going to learn this stuff. You will. So stick with it, my friends. God bless. All the best from the whole team at Charting Wealth World Headquarters. By the way, don't forget, if you are a Patreon member or want to become one, next Wednesday, the 7th of October, 12:30 Eastern Daylight Time, no matter where you are in the world, do join us. We will be sending out more information. All of our Patreon members, you know the numbers and how to access things. The new Patreon members, it's in your initial email. If you want to be a Patreon member, sign up. We're happy to have you with us. Please go ahead and start getting your questions in, and the ETFs and stocks you want us to help you review for practice trading. Don't forget, our book is available at the website and, of course, in your show notes every day at the YouTube channel. If you get us on Facebook, Instagram, YouTube, however it might be, or you simply go to chartingwealth.com. You can see all the links there. God bless, my friends. All the best. Again, take care.